Hey everyone, how you doing today? We have topic number 2 with Greg Dickerson. How you doing, sir?
Doing great, Michael. How about you?
I'm doing well. So I don't know if you've been following this, but GameStop, AMC, short squeeze, Robinhood, a lot of the press in the market the last couple of days have been around
Bitcoin, silver.
Bitcoin. Yeah, silver this morning. Exactly, exactly. A lot of what I'll call manias going on. And I've experienced a couple in my lifetime. The dot-com crash is where I cut my teeth and was ultimately burned. The single family homes obviously was a mania, and now we have another one. So I'm just curious what you see, what's going on. It's fascinating to watch from the sidelines.
It is. And again, and I'm a spectator. So
Yeah, me too.
I've never been a market participant. I've been real estate and business. That's been my investment thesis my entire career, and it still is. The only time I ever did anything in the stock market was at the bottom of '09. I got in, bought a bunch of stuff, and I got out. I did the same thing back in March here. Was it March here when we hit the
Yep.
lows
Yeah,
last
March.
year?
Mhm.
Did the same thing back in March, got in, bought some stuff, got out. So, I'm opportunistic, and what I didn't know and what I didn't have any understanding of was how big and how deep the Fed was going to come in and what kind of effects that would have on the markets. So that's been kind of interesting. And I think that's caught everybody off guard, including some of the smartest people in the business, just had no idea the effects that this was going to have. So what we're seeing now is you're seeing a lot of froth, a lot of frenzy, a lot of people just trying to get in while things are hot, thinking that it's never going to come down, it's going to continue on, and the government and the liquidity is just going to keep flowing and it's never going to end. The problem is booms never last, busts never last, good times never last, bad times never last. This will end, and it's going to end bad for a lot of people that are, the fear of missing out, that want to get in, that think that Bitcoin is just going to keep going up and up and up, that gold, silver, all these other things. But it's highly speculative. It's extremely dangerous. And, the one thing to remember for anybody who's playing is you should never invest more than you can afford to lose. And don't be surprised when you do. The other thing is when you do win, make sure you understand and put away for taxes.
Yeah.
A lot of people
Good call.
are making, you see the stories about people using this GameStop play to pay off college tuition, pay off medical expenses, and those things. It's a once in a lifetime thing for these people
Mhm.
that went in and saw it grow 1,500%. That's great, but remember, half of that's going to be gone to taxes. So not quite half, depending on your tax bracket, but you should put away half of it just to make sure you're covered for whatever happens and whatever comes along. So I think a lot of people are forgetting that they got to pay taxes.
I think that, yeah, that's very well said. The other thing I want to talk about this, because again, I've experienced two manias. One hurt me, and then one I protected myself. And you're so right, right? Manias are, let's just say this about market manias. They're fun to watch. They're fun to participate in. If you get out at the right time, right? It's better to get out early than late. I'll just say this: when manias go on like this, it's not a sign of a healthy market. It's
Yeah.
just not. It's it's a sign that we are near an inflection point, in my opinion. Now, can I call the inflection point? No, but I can certainly say that this is not a healthy market. Would you agree with that?
Oh yeah, absolutely. Yeah, there's nothing healthy about it. There hasn't been. It's artificial, and it's going to land. It just has to. And once things change, once the interest rates change, liquidity stops, and the Fed quits pumping money into the markets. All of this is going to come home to roost. And I think a lot of the tables being set, by a lot of players that understand that. It's really interesting. So when you go back to 08, 09, pre 2008, 2009, during the boom real estate years, we all thought, man, it's never going to end. The property's just going to keep going up and up and up. And you just didn't know that banks could implode. And what you're seeing now is you're starting to see some danger signs of that kind of thing happen, with people borrowing on margin, banks being over leveraged, companies that are borrowing money that are, insolvent. At some point, those businesses are going to go out of business. The investors are going to lose their money. The shares are going to drop, and all the speculation in the world, this whole short squeeze, at some point, the retail guys are going to run out of money. They're not going to be able to outlast the hedge funds. So that's going to backfire and burn on them. And, a lot of them are in there preaching, hold, 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 don't sell. And what happened? It's down 30% today.
Yeah.
So, and it got stopped. So it's very interesting what's going on. It'll be interesting to see how and what kind of regulation comes out of this,
Mhm.
and what fundamentally changes on Wall Street, because it's not what what it was meant to be.
Yeah.
A vehicle for companies to raise capital, to fund good businesses and for people to invest their money long term and make money. It's now it's just a casino. And I mean, that's all it ever has been for the last, I don't know, 10, 15 years, 20 years. It's just a
Yeah,
casino.
it is very interesting, and I've actually done some research about the crash in the the 1920s. Right, Joe Kennedy is famous for saying, he was getting his shoes shined, and when the shoe shine boy was giving him stock tips, he knew it was time to get out.
Hmm.
And that's how the Kennedys made their first fortune. They obviously made a second or grew their fortune in Prohibition, on that whole route from Canada. But um, that's interesting. And then when I equate that to Reddit, right? Reddit's essentially a free forum where you can go in, and Wall Street Bets is the page or the subreddit that's getting a lot of press. It's just, there are probably some I'll say this, there are some great analysts in there, but they're dwarfed, right? There may be 100, there may be 1,000, but that subreddit group's now 3 million strong. And most of those people are momentum, fear of missing out, total retail, and they're going to buy it hook, line, and sinker. They won with GameStop. Let's hope they got out. There might be winning with silver today because silver is up 10 or 11% today. But eventually it's going to bite them in the ass. And momentum like this doesn't last, whether it's mortgages being a problem or single family homes being overvalued. I mean, I sold houses at the peak in 07 that are still not back to where they are 15 years later. Right. So if you're going to buy GameStop $350 a share and you're going to hold forever, it may not get there ever in your lifetime. Right. When you look at
GameStop will be done and out of business before it's all over. But here's the thing. Somebody told me a long time ago, any fool can make $1 million. It takes a genius to keep it. The faster the money comes, the faster, the easier it comes, the quicker and easier it goes. So, that's what's happening, so, and when you do it once, you get the sense that you can do it again and again and again. And, it's an anomaly, and, Reddit's not going to be able to, and it's not what everybody thinks either. There's some pros in there. Believe me, there's guys on both sides of that trade. And I think when all the dust settles and all the investigations are done, you're going to find out that there's been some intentional manipulation in there by the institutional guys in that Reddit forum, playing both sides of this whole thing. So it's going to be really interesting when the dust settles to see what's really what and who really is affected. But the thing about stocks, period, is that they can vaporize overnight. Bitcoin can, you can get locked out. It can lose its value. Stocks, same thing. I mean, it's just such a dangerous thing. It's not investing. It's gambling. It's pure gambling. And, that's who you see a lot of people that are doing well, are these guys that were doing all this, sports betting and stuff like that had nowhere else to go. Look at Dave Portnoy, or whatever his name is.
Yeah.
Who was the
Barstool Sports.
Guy yeah. And then he moved into, stocks and stuff because he didn't have anything else to do. And I know a lot of young people. That's the thing, is there's a lot of young people jumping in, and it's just a game. It's gambling. They're day trading. And, I tell you, so back during the boom, like you're talking about, I know a lot of people that took their life savings and quit their jobs and started day trading and lost it all. And, same kind of thing back in the froth of what was it, 2000, 2001 boom.
Mm-hmm.
A lot of people started getting into day trading and lost everything. So this has happened before. And unfortunately, we're going to see it happen again.
Yeah. And it's going to be spectacular. I mean, I don't mean spectacular in a good way. It's going to crash. It's going to land on people's heads. Again, GameStop will never be worth $350 a share. That's not the economic value of the business, right? It's rented space. It's video games in a store. Sure, maybe they can go, online in some fashion, but it's just going to be bad. And it looks like it may be happening today. Who knows? Maybe they'll hold it for another few days, but they won't be able to hold this for 45 days, right? They'll just run out of money.
Yeah. They can't outlast the market. The collective capitalization of that group is nowhere near, what these funds have put together.
And they're going to splinter. I mean, that's the big thing you don't understand about retail investors. And that's what I saw in 2000 or 2001 or whatever it was. We all agreed one way. I remember Webvan, right? That company that was going to be essentially the DoorDash for groceries 20 years ago. Everybody got behind it, and it was out of business in 180 days. right? There were
Yeah.
tens of billions of dollars behind it and just gone. So sad.
Yeah, it's pretty interesting. It's fun to watch, and
Oh yeah.
you know, and I'm not a super sophisticated market guy. I don't know a ton about Bitcoin. I don't know a ton about, you know, the stock markets and things like that. All I know is that, you know, the couple of times I've got in and got out, speculative. But you know, to watch what's going on now, I mean, again, the most important thing to know is a top. And I tell you, this market has been at a peak. It's dangerous. It's dangerous. You know, the levels that the market's at right now, and some of these stocks. And we haven't even talked about SPACs and that whole thing going on there.
Yeah, no kidding. Yeah, so I guess we'll wrap up this one. Really, what I want to say is, again, what is going on in the market today is not a sign of a healthy market. Second, do yourself a favor. If you're in the game and you're treating this like a game and you're saying it's fun and exhilarating and all that, call yourself what you are. You're a speculator. You're not an investor. Right? Don't call yourself a long-term investor if this is what you're doing. Right? You're
Well, I think everybody understands. I think they realize it's a game, and you know, they're speculating, and it's fun. It's fun, yeah, man. But you know, go to Vegas because there's less people there, and your chances of winning are probably a little better right now.
There you go, man. Well, thank you very much for your time. That was fun.